Welcome to Officer 24/7. My name is Niharika Valia Bhatnagar, and I am with you with the area of accounting and financial management for bankers, and we are preparing for the May 2024 attempt. Let's look at the topic, everyone. We are preparing the chapter number 1 or unit number 1 in this area, that is accounting principles and processes that we're taking up. The first topic is the definition, scope, and accounting standards. That's the particular topic that I'm starting from today. Okay. Basic accountancy procedure would be taken up after this topic. Acha everyone, let's continue. What is this topic all about? Now, here comes the first question. What is the primary purpose of accounting? Why do we do accounting? It's entertainment in terms of the communication of financial information, artistic expression, or scientific research. A very easy question. Since it's the first question, going with the basic question there, what would be the answer in this case? We talk about what is the primary purpose of accounting. The primary purpose of accounting is communication. Do you know why do we prepare financial information? The financial information is to communicate to the people who are interested in knowing the books of accounts. These people have the right to know what exactly is happening in the organization. They want to know the particular work in which they are talking about. They want to know what exactly is happening in the organization. Are they making a profit or a loss, right? That is the purpose of this particular area. So financial statements are prepared with a view to show whether the organization is having a profit or a loss, whether I should put my money into this organization or not, right? So in this case the correct answer is, that is the portion of uh, communication of the financial statements. Acha, who do we communicate, everyone? Do you know? There are two kinds of users. Financial information, that is internal, external. Internal and external information, how do we specify the internal and external users? The internal users are the people who are sitting in the organization. Then external users are the people who are not a part of this organization, but they are always interested in knowing what is exactly happening in this business. Okay. Okay, that is what we talk about. The internal users will include the area of um, management, employees, as well as the shareholders. They're all internal people. While when we talk about the area of external users, that will include taxation department, bank, and even the ROC, registrar of companies. Then there are so many other departments which are looking at it. Okay. Chali. Now let's look at the next topic. The next question is, according to the American Institute of Certified Public Accountants, AICPA, what is accounting, everyone? It's a form of entertainment. It is basically a portion where we talk about it's an art of recording, classifying, and visible, everyone. Then an art of recording, classifying, then summarizing, as well as the financial statements there. And the second method that we have here is a branch of accountancy focusing on summarizing financial statements only, or a type of costing. AICPA had said that accounting is a form in which basically an art of recording. We record whatever is happening in the business. We classify it into different areas. Then we summarize the financial statements. Summarize means we collect them together and we form the financial statements of the organization. Now, what do you mean by summarizing there? Summarizing means we prepare the entire financial statements, that is profit and loss account and balance sheet. And through the profit and loss and the balance sheet, we get to know about the basics of this organization. I'm sorry. The correct answer in this question is an art of recording, classifying, and summarizing the financial transactions. Acha, what does the bookkeeping mean, everyone? Interpreting financial data, summarizing financial transactions, recording business transactions, or analyzing economic events. What would be the answer? What does bookkeeping involve, everyone? Acha, bookkeeping is one of the first terms to be used in terms of accounting. Do you know? In this area, one of the basic things that happens is bookkeeping. Book and keeping. Book means whatever records of the organization are, you are noting it down every single day. So interpreting is when you are trying to understand it. But before interpretation, you have to note it down. When you are noting it down, it is C, recording the business transactions. So the purpose of the bookkeeping is to record the business transactions. Next point. This is it. What is the role of accounting standards? What do you mean by the role of accounting standards? To make accounting more complicated, to provide set of rules for recording events, or to ensure consistency of in financial reporting, or to eliminate the need for financial statements. Why was there a need of financial of accounting records? What would be the answer in this case, everyone? And in this case, the correct answer would be, what is the role of accounting standards? The accounting standards are basically, uh, though I would say C is also there, but the main point is B is also correct overall, na, to provide the set of rules of recording events. That is not only for recording events, it has to be C because, see, if you and I follow the same rules, you follow the rules and I follow the rules. So your company and my company, that is C of N, company of mine, that is Niharika, and then you have a company of, say, Mr. X. So both the companies are comparable only and only if we have a books of the accounts of this organization is defined and both of us are following the rules. So we are both comparable. है ना? That is what we have in this area. That is to ensure the consistency in the financial reporting. Which phase in the evolution of accounting is associated with the need for business owners to keep records of transactions? Stewardship accounting, financial accounting, cost accounting, or management accounting? There are different phases of accounting. Do you know? It starts with stewardship accounting. Under stewardship accounting, what happened was these organize. Pata hai, there, I think let's talk about it and from the point of view of Europeans. What happened is, long back before the organizations had that particular area of industrialization, na, so these people had a particular situation that they had huge areas, right? They had huge areas of land which they used to give on a rent, you know. So basically what they used to get was revenue from the land that they have given to someone. That is how they started working. When the point was, the landlord could not keep the record of all these things on his own. So what he did was he asked the steward, that is a particular person whom he trusted, ki steward, you maintain the books of accounts for me na. He said, okay, fine, sir, I'll do that for you. So stewardship is basically when one particular person notes down the books of accounts, you know. Stewardship is that particular situation. Then that is one particular person was chosen who would maintain the books of accounts of the landlord. Slowly and steadily, that came to be known as stewardship accounting because the first level of accounting was this. But overall, industrialization happened. Then financial accounting came into being. Financial accounting was the basic accounting to find out the profit or loss of the organization. Then, noting down only the profit and loss was not sufficient. The organization wanted to know what exactly was their manufacturing cost, exclusively their manufacturing cost, not anything else, but they wanted to know what exactly was their manufacturing cost. Rest everything was not important. For example, interest on their loans wasn't important because it was a finance cost. In manufacturing, loan is not included. In manufacturing, raw material, finished goods, and all these things are included. So technically, this particular accounting system came out of industrialization hardcore for the goods. And then we have management accounting. The managements were working. These managements were badly in need of one thing, everyone. What were they in need of? These organizations were badly in need of one thing, that they wanted to know whether the managers are working in an efficient manner or not. If they are not working in an efficient manner, how will it work? So in this case, the most important thing is that just to make sure that everything is working for their side, the managers also started keeping their books of accounts, and they started maintaining certain records, not the entire books of accounts of the company, because that would be duplication. They wanted to know whatever their performance was. Their performance was evaluated through management accounting, and this became the reason they could get more incentive. Okay. So now let's talk about the which phase in the evolution of accounting is associated with the need of owners to keep records. They wanted to keep the records of their transactions because obviously human mind is very limited. I cannot note down everything. To note down everything, I need to have proper records. That means the first one, the initial starting, was by stewardship accounting. At that point of time, there were no accountants, there were stewards. Okay? There were stewards at that point of time. Now, what does the cost accounting primarily focus on? Recording of financial transactions, reporting of financial statements, determining the cost of the products or services, or managing the human resources. Cost accounting is related to the exclusive cost of production only. Be it services or be it products. In terms of products, we get raw material, then we have work in progress, and then we make finished goods. Then in the second area, when we talk about this entire topic there, that is determining the cost of the products or services. The second point was managing the human resources, basically human resource based cost. That is something that is required in every organization. But everyone, when it comes to services, when I have a professional service that I'm providing to you, in terms of professional services, the people who are working, because you're not giving a product, you are providing service. The cost of that particular person will be included in it. So basically, cost accounting is to note down whatever the cost that you are incurring in terms of making the products or going through the services. Okay. Then comes the next question, that is determining the cost of the products or services. Management accounting is backward looking, based on the historical data, forward looking, and concerned with decision making, and mainly concerned with financial reporting, or only applicable to large corporations. Okay, let's talk about it. When we talk about any form of accounting now, all forms of accounting are historical. There is not even a single form of accounting which is not. Every form of accounting is historical. Why do we call it historical? Because this kind of accounting is stated in such a way that it had history. Okay? Basically, we do not analyze the books which are just prepared. We have to compile it for the entire year in order to analyze where the business was in the beginning and where it had reached in the end. So, we, first of all, every business transaction is always and always backward looking. Okay? That's one of the basic things to understand. Now, when we talk about the forward looking or backward looking, then when we talk about backward looking, we're looking at whatever was made in the past. And forward looking is whatever we're going to make in the future. Banks ask this, but if I have to apply for a loan, then you will definitely ask for me for the projected balance sheet. That is also a part of this. But that is a forward looking thing. You know? So in this case, management accounting is basically forward looking and based concerned with decision making. Management accounting is totally concerned with decision making because they will see the prior records, they will see whatever we are doing and how do we consider and reach it out in a further way. That is called forward looking and concerned with decision making. Now let's talk about the next type of accounting. Social responsibility accounting considers what? When we talk about social responsibility accounting, it considers only economic effects of the business decisions, both economic and social effects of the business decisions, or um, only the social effects of the business decisions, or none of the above. What would be the answer? When we talk about social responsibility accounting, this is the kind of accounting which is considering only one thing, that is, whatever we are doing for the society, it will consider that part. Okay, so in this kind of accounting, we are always noting down whatever is happening in the organization in terms of the social responsibility. Corporate social responsibility is noted down on this basis. Okay, it's a part of this area only. That corporate social responsibility is a situation where we are recording whatever the organization is putting in the society in the form of education, in the form of their upliftment, whatever we do for this entire area would be covered in this. Then, okay. So, what would be the answer? Only economic effects of the decisions, both economic and social effects, only the social effects of the business transactions. What do we record? But the point is, the business cannot record only the social effects because it is just not possible for them to record. They can always record economic effects, but only social is not possible. So, what they do is they record both. They record both economic and social effects of the business decisions. So both economic decisions and the social decisions are to be stated. What does the human resource accounting focus on? The valuation of intellectual property, valuation of physical assets, valuation of human resources, or management of financial resources. But for a good amount of time, it was never believed that humans are basically assets even. For them, humans are replaceable. One particular person comes, the other person goes. So in this case, they were clearly stating that part. So human resource accounting was later noted. They accepted one fact. That is, when people are working for you, there is a cost to it. The human resource accounting is basically a system under which the people who are working, there is a cost to their training, cost of their maintenance, cost of their retention even. It's very hard for people to be retained in the organization. The valuation of the intellectual property has to be done. There is no intellectual property. Human resource are basically the people who are working for the organization. And when they are working, there is a cost to it. And whatever value they are contributing is basically the reason the organization is running. You know? So in this case, this is a method of valuation of human resources. Earlier, this was stated this cannot be considered in terms of monetary forms. But now they consider it in the human resource area only. Human resources are considered as a particular resource which is talking about the cost which is incurred on these people, as well as the contribution of the human resource in terms of the success of the business. So it is noted in that terms. Okay, next point is, what do you mean by inflation accounting, everyone? Inflation accounting is concerned with adjusting values of assets and profits for inflation, recording the transactions during inflation, ignoring the effects of inflation, and reducing the impacts of inflation on the financial statements. Inflation, what do you mean by inflation, everyone? First of all, when we talk about inflation, now inflation accounting talks about one thing. First is the value of the goods and services rises during a certain period of time, right? Right? Maybe earlier something was available for rupees 10, now it is available for rupees 30. That is because of inflation. Now, what is the reason behind inflation? That can be anything, economy based, in terms of business based, it can be related to any of that area. So when we talk about the inflation portion, inflation is something that can be adjusted values in terms of assets and profits, or recording transaction during inflation. Recording of transaction has to be done at every situation, be it in the time of inflation, be it at the time of deflation, be it at in the normal timings as well. So recording is part of bookkeeping. So this should not be considered. Inflation accounting is concerned with adjustment of the values. The point is, during this period of inflation, we have to adjust our books of accounts to find the true situation of it. है ना? पता है? In terms of AS2, you will study the AS2, that is Accounting Standard 2, which is evaluation of inventories. Same in Ind AS2, it is the same, valuation of inventories. Such things clearly state that whenever inflation is there are certain methods which of valuing the inventory that should not be used, because that will be misguiding the people, because during the inflation the price of everything is high. So that particular high price is going to impact the decision making in terms of the production cost and the other scenarios. So inflation accounting is concerned with basically what? It is concerned with adjustment of both. The value of the assets are also going high. The stock is being available at a higher price, and even the profits. Then comes next point. The National Financial Reporting Authority is constituted to advise on accounting policies, enforce accounting standards, regulate financial reporting, or all of the above. What is NEFRA? पता है? Before this NEFRA was there was accounting standard boards. It was called ASB. ASB used to work for it, and then they said, nah, this is the time, let's introduce IND AS. IND AS were introduced with the contribution of NFRA as well. And most important, I think everyone, IND AS is not given by ICI. AS is given by ICI, while IND AS are given by MCA. Ministry of Corporate Affairs, though prepared by ICI only. But you will find the IND AS on MCA website there. Though you will find it at both the places, though it is there in ICI website as well as in the MCA, but it is stated that MCA has issued it, but they are prepared by the same organization, ICI. And ICI has a specific committee or National Financial Reporting Authority which is responsible for this. So this particular authority is super duper important for accounting. So the answer is all of the above. NEFRA is basically working for advice on accounting policies. It advises them how to prepare the new accounting policies, what next to be done because the world is changing, enforcing the accounting standards as well as regulating the financial reporting and all of the above. When we talk about NEFRA, it is actually doing all of these things for ICAI. Okay? Then comes which accounting standard deals with the disclosure of significant accounting policies? AS1, AS2, AS3, AS4. When we talk about accounting standard deals with disclosure, it is AS1. AS2 is for inventory valuation. We just talked about it. Then next, the AS3 and AS4. Please write about the same in the comment section. I'll be waiting for your answers. AS3, what is AS3 and what is AS4? Okay, the answer here is AS, that is accounting standard 1. Complete disclosure is stated in this particular area itself. Acha everyone. Hello everyone, welcome to Officers.24/7. My name is Niharika Walia Bhatnagar and I'm with you with the area of AFM, and today we are going to talk about the area of basic accounting procedure, that is unit 2. In the last class we covered unit 1, which included the accounting standards and the basics of accounting, and now we are moving towards the area of unit 2. So let's do some questions related to unit 2 now. Basic accountancy procedure. Here comes the first question. I have given one particular case study as well. That is something I'll be discussing at the end. If you haven't subscribed to our channel yet, then kindly subscribe it. Secondly, share the session among your peers. Thirdly, if you like this session, then please go ahead and like it as well. That's a source of motivation for us, right? So let's continue further. Okay, we were talking about what fundamental accounting concepts suggest that transactions should be recorded at the original cost. Number one is the money measurement concept, realization concept, cost concept, or dual aspect concept. Which specific fundamental accounting concept suggests that transactions should be recorded at their original cost? Original cost means the price we paid to purchase that particular thing. Money measurement concept talks about this money, the money that we are using. Realization concept talks about the amount that we are realizing. Cost concept talks about the cost that we are incurring to purchase something. For example, I bought my car. So I bought my car, I got it from X showroom price, and then I had to pay registration charges, insurance charges, as well as I had to pay multiple things. So after making all the multiple payments, now I know the situation. कि अच्छा, this is the amount that I have to pay. Now the scenario is that what should be the amount? The ex showroom price or the prices which are required in order to run my car in India. See, I have to pay insurance, I have to pay the registration charges, I have to pay road tax, I have to get the pollution done. When I'm purchasing the car, everything has to be done. So whatever is making my car ready to use now, that is the cost, historical cost. If I'm getting a particular AC, the AC is on the floor, the person just left it there. Now the AC cannot be used. It can just stay there on the floor. But I have to put it up, only then it will start working. So in this case, what would be the answer? The answer would be the cost concept. That means the cost of installation of that particular AC will also be a part of it. That is what this cost concept talks about. The cost that you are incurring in terms of uh, uh, the cost that you are incurring in terms of purchase of an asset. Okay, so whatever cost, the actual cost that you're incurring would be a part of it. Now comes which accounting convention emphasizes the need for caution in recognizing potential losses and ensuring that the profits are not overstated. Convention of consistency, convention of full disclosure, convention of conservatism, or historical records concept. Which accounting convention is saying that we should recognize our potential losses? Whatever potential losses can happen, we should recognize it beforehand and should be recording it, and we should ensure that we are not overstating the profits. Matlab, whatever the value of the profits is, we are not going beyond that. Consistency, the convention of consistency talks about if you are following method A, please continue with it, don't switch to method B. Then convention of full disclosure, that means you have to clearly disclose everything that we are stating. Convention of conservatism, anticipate the losses but not profits. Then we have historical records concept. Historical records means whatever was history, you have to, everything goes as per that particular thing only. Na? Historical cost is basically the area that we record the things at the cost that we actually paid. Matlab, the past. Whatever amount we paid is the past, and that is what we record in the books of accounts. So, what is the area of the concepts which is talking about losses and the profits? It is convention of conservatism. The convention of conservatism says, it says anticipate the losses but not profits. So the answer is convention of conservatism. It is also known as prudence. It is also known as prudence. Next, according to the business entity concept, the business is considered separate from its owners. What does the principle primarily help in achieving? Consistency in reporting, accurate measurement of money, preventing personal transactions from mixing with the business transactions, or matching revenues with expenses. According to the business entity concept, business is considered separate from owners. Okay, this means if A puts money in business, whatever money I'm putting in the business, it's called capital. Whatever money I'm taking out of the business, this is A, and A has A and Sons. This is the name of my business. A has a business called A and Sons. If A is withdrawing the money, it is called drawings. This means even though A is giving money to its own business, but A and Sons is a separate entity. Whatever money he is investing in the business, it's called capital. Whatever money he is withdrawing from the business is called drawings. What would be the answer in this case? Answer would be actually business entity concept and preventing personal transactions from mixing the business transactions. This is also known as business entity concept. Okay. I'm also going to state the concepts with which these points have been created. Everyone, the answer was C. Next point, the matching concept in financial accounting is closely related to which other concept? Cost concept, business entity concept, accounting period, or realization. Matching concept. But most of the people who are looking forward towards the matching concept, now they normally tell me, "Okay, ma'am, this must be debit is equal to credit." Now, it is not. Matching concept says if you earn this year, that's because you are making expenses this year. If I'm making any earnings this year, that's because I'm spending on Wi-Fi. I'm spending on my phone. I'm spending on the equipments. I'm spending on so many things. Right? So whatever amount that I'm spending this year to earn the income of this year is included in matching concept. So matching concept has its own sibling called accounting period concept because the word this year and this year is common in both income and expenses. Right? Next point. What is the role of accounting standards, everyone? To make accounting more complicated, to provide set of rules for recording events, to ensure consistency in financial reporting, or to eliminate the need for financial statements. You just can't eliminate the need for financial statements just because you made some rules. This is definitely wrong. Uh, in terms of recording the events, not only recording, it is applicable at almost every level. The accounting standards are not only at the level of recording, but also at the level of understanding, interpreting, and even creating the summarized things as well. So I would say the answer is to ensure consistency. Okay, so that the last year's balance sheet and this year balance sheet is comparable, and I can also compare my accounts with your books as well. Okay, na? So next question. What accounting principles suggest that financial statements should disclose all relevant information that may be required that may impact the users? For example, I asked you that I wanted to inquire about the project so and so. You said that, ma'am, pata hai, in our business now we earn this income. I said, sir, I'm asking about the project so and so. He said, I'll come to the point, ma'am, but let me just tell you a few more things. Pata hai, we have this part of business, then we have this part of business, then we have this part of business, then this, then this, then this. And I'm still stuck with the same question. What about I'm asking you at this point of time? Then you will come to the point. Acha, ma'am, this is the point. So according to this should be done. Materiality talks about only the relevant or the most important area. But giving the people every important information when you are thinking, for example, I looked at your business and said, this business has a charm. I'm thinking to invest in this business. You said, okay, ma'am, if you want to invest in my business, that's fine. But let me tell you everything about my business first. The general information. That is convention of full disclosure. Consistency means there is no harm in change, but even the change should be consistent. There is no harm if you are using method A, now you're moving to method B, then decide to method C. There is no problem in this. But if you're changing, you should state it properly. Then is matching concept. Matching concept says, we just talked about it. The expenses you earned this year should be in relevance to the income you earned this year. That is what we call as matching concept. In this case, the answer is the convention of full disclosure. We're so involved with explaining the entire points there. The answer is convention of full disclosure. Matlab whatever happens in the business, whatever your business does, whatever your business things are, everything has to be stated properly. Convention of full disclosure. Which accounting concept ensures that every transaction has two aspects, a debit and credit, maintaining the accounting equation balance? Dual aspect concept, business entity, measurement, money measurement, and historical records concept. Dual aspect concept says every transaction has two things. One is debit, one is credit. That means LHS is equal to RHS in every case. This is not a chemistry where we'll say accept this or accept that. In accountancy, there are actually no exceptions. Then comes a business entity concept. A business entity concept says person and his business are two different things. Money measurement concept. Money measurement says everything has to be denoted in the form of rupees. Historical records, we have already talked about it, right? We have talked about almost every of these. Dual aspect is new, which said LHS is equal to RHS, also called debit is equal to credit, everyone. In this case, the correct answer is dual aspect concept. Done, everyone? Very now. Let's move on. Next question is, according to the going concern concept, how is the entity viewed for financial reporting purposes? How is it reviewed? As it will operate indefinitely, as it will liquidate soon, or as if it is a separate legal entity, or as if it is a cost effective entity. What would be the answer in this case? Uh, the point is going concern concept. Going concern concept says men may come and men may go. But in the upcoming, the foreseeable future, the business is here to stay. The business isn't dying. So in this case, what would be the answer? It would be as if it will operate indefinitely. But pata hai, in terms of business, you will never find we say that the business is here for forever. They will say in the foreseeable future. It says foreseeable future. The future that you can see from now. You can see that the business will exist. Okay? Then, which principle of accounting suggests that financial statements should be prepared at regular intervals, typically annually or quarterly? Business entity concept, or convention of conservatism, or accounting period concept, or we have realization concept. Done, everyone? Chaliye. Um, this concept is talking about regularly, quarterly. The financial statements are prepared at only one period of time. The actual final statements are prepared on the basis of business entity concept. We talked about it. It talks about business and person are different. Conservatism says be scared. Anticipate the losses but not profits. Don't party before you get the money. Then comes accounting period concept, which says every year, how are you recording the books of accounts? And someone said, I'll start from Diwali. Someone said, I'll start from Lodi. Someone said, I'll start from the Onam. I'll start from Navratri. So everybody talked about different festivals that they strongly believed in, and they would start their books of accounts that way. Income tax department said we cannot work throughout the year as per your convenience. We are giving you time from 1st of April 20 from the 1st of April of 20 whatever the year is to the next year, that is or for 31st March of the next year. We will record the books of accounts as per this only. So whenever you start your business, you will end your first year on 31st of March. From next year onwards, you are also settled into this particular system. So when you're talking about regular systems, regular accounting intervals, it is always talking about accounting period concept. Emphasizes consistency is applying accounting methods over the period of time is known as historical records, convention of consistency, convention of materiality, or dual aspect. What would be the answer, everyone? The doctrine that emphasizes consistency is applying accounting methods are over the period of time. But the consistency, acha, everybody, I was already working. I thought let's change the method because this method is not working that much. You said okay. I changed my method. My method was going good. Then I changed, thought of that this method is going fine. I continued with it. If we bring a change, right? Even if we bring a change, one particular thing is clear now. Even after bringing the change, whatever we are doing, then bringing the change is not a problem, isn't it? But you have to be consistent with the changes. That is what this particular area talks about. This is convention of consistency. Okay, this particular point is given from the question itself that the keywords are visible there, right? So that's the answer. Now comes the next point. This is a set of questions, multiple questions which are going to be clustered together. Let's talk about it. XYZ is a manufacturing firm that recently completed a major project to develop a new product. That the management is now preparing financial statements for the year end. They were preparing their financial and year end statements. They saw all these scenarios. So we will see the scenarios and we will also quote the specific answer as well. Scenario first, that is, the company values its inventory at the lower of cost or market value. Which accounting concept is being applied in this scenario? Cost concept, money measurement concept, convention of consistency, or convention of conservatism? Everyone, the company is applying inventory at lower of cost or market value. That means you're not trying to overstate things. You are trying to show it at the original price itself. It is the convention of conservatism. That is, anticipate the losses but not profits. Then comes scenario number 2. The company recognizes revenue when the product is delivered to the customers, even if payment is yet to be received. Which accounting concept supports this practice? The company recognizes the revenue when the product is delivered to the customers. Matlab, as soon as the product is delivered, we are ready to it. If the payment is yet to be received, even if the payment is not sorted yet, then what would be the answer? Matching concept, realization concept, then historical or dual aspect. When we talk about the answer there, the answer is realization concept. The realization concept says, this was the concept which we were yet to discuss in detail now. Realization concept says the time you have a certainty that the money is yours, you will get it in any case. That is where you record it in the books of accounts. That's how we record the particular term of realization concept. Okay? Done? Chaliye. Now let's look at the next question. Scenario statements, the financial statements, this is the next scenario, includes a note disclosing the upcoming expiration of the patent that the company owns. Which accounting convention is being followed in this disclosure? The financial statements which are going to disclose that the patent life is for maybe 10 years, 5 years, whatever the time period is. The concept of materiality, only giving the most important relevant information asked. Convention of full disclosure, whatever happens, you tell. Consistency, don't change your plan. If you are, then disclose it. And the last is business entity concept. Man and his business are not the same. So in this case, the correct answer is the convention of full disclosure. Whatever is happening in the business, patent is ending now, specify, disclose that part. Okay. Then comes the company records its transactions in the functional currency of the country in which it operates. Which accounting concept justifies the practice? Business entity, money measurement, dual aspect concept, or historical records concept. It says saying that you should record things in rupees. Huh? There is no problem in recording in rupees. There is no problem in recording in dollars. You will record things as per that requirement. Now, for this particular purpose, this means our home currency is rupee. So record it in rupee. The answer is money measurement concept. You will record everything in your reporting currency. And your reporting currency is your home currency. That is, our reporting currency is rupees. Okay? Okay. Next question. The company follows the policy preparing the financial statements quarterly. They are preparing quarterly. Just a moment, I think. Let's adjust the particular point a bit. So, of quarterly basis, which accounting principle is guiding this periodic reporting? Entity concept, the convention of conservatism, accounting period, or convention of materiality. So, one thing that has been hidden in this area is convention of materiality. Just correct it a bit for you. Visible now? The answer in this case is when we are talking about the quarterly basis, na, this is what banks do. This is what many of the businesses do. This is very normal that you prepare quarterly statements and then you give the final as well. RBI asks it, SEBI asks for it, right? So in this case, the correct answer is accounting period concept. Based upon that 1 year, you divide it into different quarters.
Good evening, everyone. Welcome to Offices Adda 24/7. My name is Niharika Walia Bhatnagar, and I am with you with the area of AFM, that is Accounting and Financial Management for Bankers. So we are preparing for May 2024 attempt. So everyone, I hope I'm audible and clearly visible. Let's begin with our session today. Now, today I'm going to talk about the next unit, that is maintenance of cash, subsidy books and ledger. So we'll be talking about all of these. The first thing that happens in any business is journal. Okay, let's talk about the journal first. What do you mean by journal? Journal is basically through which the entire recording is done. Okay, recording of each and every transaction. The recording of the transactions is done through journal. Okay, first is journalizing. Once you have journalized it, then the first part is over. After journal, the next point that comes is that after journal, we prepare the tabular form of it. That means under tabular form, what are we doing? We are creating a specific table. Under that particular table, we'll be putting everything in a simplified manner, because the managers need to understand the things in the most recent way. They just don't want to take a lot of time. The particular information should be updated, and at the same time, it should be completely summarized. So what do we do in this case? Let's look forward to it. Achha, I think explanation can be done further here. So first of all is journal. The second part is ledger. Under ledger, what you do is you're creating the tabular form. Achha, sometimes now having a rough notebook, then putting it into the fair. They said this is taking a lot of time. They said what to do? They said keep different notebooks now. Different notebooks for, we had different notebooks for English, Hindi, maths, then socials, or for all the subjects that we had in school, we had separate notebooks. They said, why don't you create different notebooks instead of classifying them later? So when they said create different notebooks, that means you have different notebook for the cash purchase. All the cash transactions are taken to the cash book. All the cash transactions belong to the cash book. Then whatever transactions that we are doing in terms of the business there. Then which are related to cash is already gone. Then what are we left with? Purchase and sales. So purchases which are basically on credit would be included in this case. Then the next part is this is called purchase book, everyone. Then the next book is sales book, which is recording everything which is again on credit. That means sales return, then purchase return, then bill receivable, bill payable. In this way, all these things are recorded under this area. That means maintenance of cash and subsidy books and ledger. They are all taken in this area. Okay? So this is what we cover in this entire area. How do we look forward to it? The first point in this area to be covered is the MCQs of the particular topic. Instead of having entire tabular form, instead of having journal recording, that means individual transaction being recorded. Now many things are just recorded in the books. Now both of these things are not that troublesome anymore. Earlier all these things were required at a different level, but now due to the softwares, the accounting softwares are so good that as soon as you put a journal entry, it goes directly into your balance sheet. The impact of the same, you don't have to think of it. But if you have got the perfect accounting softwares, then it will automatically have that particular thing. So in this case, you will not have to be bothered about the fact I have put something in journal, then I have to put something in ledger, I have to transfer it to the balance sheet. It goes directly into the balance sheet there based upon the ledger even. You can see the ledger, you can see the balance sheet, you can see the impact of each and every journal entry. That's the power of the accounting softwares which are working today. Okay, basically working about all these things, what is given in our book? In our book, they have talked about journal, ledger and trial balance and balance sheet, P&L. They have talked about all of these, how accounting begins and how the entire financial statements are finalized. So here comes the first question, everyone. What does the balancing of an account mean? What does the balancing of an account mean? Equalizing debit and credit entries, then closing the account, then is transferring entries to the ledger and then creating a trial balance. The balancing of the account basically means that ultimately the debit side should be equal to the credit side. And if we want that the debit should be equal to credit, so in this case, what are we going to do? This is the particular tabular form. This side should be the debit side. This side should be the credit side. If your debit side is more, then a balancing figure would be added on the credit side if your debit side is more. Vice versa, if your credit side is more, then a balancing figure would be there on the debit side. Because in accountancy, there is no point you can say that it's okay now, the debit is not equal to credit, it's absolutely fine. They say no, this doesn't happen. In accountancy, there's a rule. There is no exception to the debit and credit rule. Debit is equal to credit in all the situations there. Okay. So in this case, if it is not matching, that means there is some window dressing, there is some error, there is some fraud, whatever it may be. It is a negative situation there. So what do they do? What does the balancing of account mean? The balancing of account, you can see that is equalizing the debit and the credit entries. You are not doing anything else, but you are just equalizing this specific area. Okay. Then the answer is equalizing the debit and the credit entries. Then comes, what is the purpose of the ledger folio, everyone? Column in the journal. Record the date of the journal, then provide a narrative, a description of the transaction, then indicate the ledger page number or calculate the total of the transaction. What is the purpose of LF? Okay, ledger folio, when we are making journal. From journal, we move to ledger. From ledger, we move to trial balance. This is the particular idea. When we talk about this entire area, what happens in this area? First of all, when we are making a journal, from journal, we have to give the reference that if there was a particular point, for example, I received cash from someone. So that cash is being received. So the cash that I have received, this cash is basically received multiple times from multiple people. So what will I do? Whatever cash I receive, this would have a specific account. And this account means a specific table in ledger would be given to cash. And the table number should be known to me, right? So you give a specific account number to it, and that is called the ledger folio. So what is the purpose of the ledger folio in the journal column there? It is to record the transaction of the record the transaction. It is not to date. Then to provide a narrative description, the narrative description is actually called narration. It is not called ledger folio. It is actually called narration. Then indicate the ledger page number and then calculate the total. The answer is to indicate the ledger page number where the entry is posted. Next question, goods purchased on cash are recorded in the purchase journal, in the sales journal, in the cash book, or purchase return, that is journal. In which place you will record the goods which are purchased in cash. That means the purchase in cash is a cash transaction. A cash transaction means you are getting a particular thing and you have cash incoming and outgoing. So when you have this kind of situation, it is called cash book. Okay, it is called cash book. Next point, the sequence of the following activities in the process of accounting. First is journalizing the transactions. Second is recording the business transactions. Third is preparation of annual financial statements. Then we have preparation of the trial balance. Then we have deriving meaningful inferences, right? And choose the correct answer from the options given below. A, B, C, D, E, then A, B, C, D, E, C, A, B, D, E, C, then D, C, E, B, A, and then we have B, A, D, C, E. When we talk about this, what is the sequence of the following activities? When we talk about the sequence of the following activities, it would start with what? Whenever we are starting, first of all, we have to record the business transactions. We have to identify first, and then you have to record. This should be the first one. Then you have to put it in the journal. Technically, none of them has B point as first. So the answer is D. B, A. Then D is preparation of the trial balance. First of all, you record in journal, then you prepare the trial balance. They haven't given the area of, no, they have given the ledger. This is journal, this is ledger. Then after ledger, you have the area of ledger done. Then you have the area of annual financial statements. You prepare your balance sheets, and then after the preparation of your balance sheet, what will you do? You will derive the meaningful inferences. Ki, acha, theek hai, if we have made any profit, if we have made any losses, what is happening in those losses and the profits there? What is it that we are doing? Theek hai? So we'll be talking about those losses as well as profits. That is what is covered in this area. So the answer is B, A, D, C, E. Then comes the next question. The basic accounting cycle goes like this only. If I talk about the accounting cycle altogether, how does it look like? First of all, we have planning. We are talking about it now. First of all, we have identification. Identification means identify whether it belongs to the business or not. Identification. Then the second is measurement. We will measure. Okay, acha, theek hai, what is the amount? Then we will record. We know about the basics of it. It belongs to the business, record. Then we classify. We classify it into different areas wherever it belongs to the books. Then we summarize. Summarize means we are clubbing it together in the form of a proper summary so that we can tell people about it. Summarize. Then analyze. That means find out what are the inferences that you get out of it. Then you have to interpret, and then last point after the interpretation, what you get is SAI, and then you have to communicate it to the people. Now this is what we talk about in the era of accounting cycle. So when we're talking about this is what we call the accounting cycle, everyone. Then what is the purpose of the folio column in the ledger? If we talk about the folio column in the ledger, that is in terms of ledger, they also have a folio. When you talk about journal, it refers to the ledger, and when it has in there in the ledger, what is it related to? See, everything goes from a journal towards a ledger. So when journal is talking ki acha, this was the point, that it goes to the ledger. So the point which is there in the ledger, it will talk about, this will belong to that particular journal. So it records the date of transaction, no. It is narrative description, no. Then indicates the page number of the particular area of where the entry is posted. This is it into the area of where, oh, it got mixed. The answer is C. The answer is C. Okay. Next question, everyone. What are the two broad classes in which the accounts are classified? The accounts are classified on the following basis. First is natural and artificial. Second is personal and impersonal. Then we have tangible and intangible, real and nominal. When we're talking about the broad classes in which the accounts are classified, the accounts are classified in the area of personal and impersonal. Okay. When we talk about these two, accounts can be classified in the area of personal, and second is impersonal. In the area of impersonal, what do we have? Impersonal, we have real and nominal. Personal means where the names of the persons are involved. Real means where we talk about tangibles and intangibles. The assets which we can touch and the assets which cannot be touched. They are covered under real. And all the nominal takes up all the expenses of the organization. That means whatever expenses and incomes the organization is making. In the area of real, we have all the intangibles, intangible assets and tangible assets. Okay? When we talk about nominal, we have expenses and we have incomes. Done, everyone? So this is how we broadly classify it into this area. That means personal and impersonal. And in the impersonal, we have this area. In terms of personal, we have three types: natural, artificial. First is natural, second is artificial, and the third one would be natural, artificial, and the last one is representative personal. Okay? So these are all the one. So when we talk about the answer, it is personal and impersonal accounts. Done, everyone? Let's talk about the next question. What is an example of artificial personal account? When we talk about the artificial personal account, it includes the area of a person there. A person means we're talking about artificial person can be said regarding a person which is not real. Individuals are real. I am a real person. You are a real person. Then what is artificial? In terms of artificial, what do we have? Artificial are companies, banking company, insurance company, limited company, partnerships, as well as LLP, limited liability partnerships. All these are basically persons only, but in the eyes of law. They do not exist in reality. So proprietor's account, he's actually an individual. Supplier, he's also an individual. A limited company is not an individual. It doesn't breathe like you and me. You don't see Reliance roaming around in the market. You would see a person roaming around in the market. So that's an individual. So in this case, the correct answer is limited company account. Okay? So the correct answer is C. The answer is limited company account. Done, everyone? Next point. The representative personal accounts are used when individuals are involved in transactions, when many parties of the same nature are represented by a single account, artificial entries are engaged, and then accounts represent tangible items. When we talk about representative personal accounts means they are not talking about proper individuals. We are going to talk about outstanding expenses I have to pay to someone. Then I have accrued incomes, the income that I have to receive. So outstanding expenses, accrued incomes, they are all a part of this area. Okay? So the amount which we are then prepaid expenses are also part of it. And advances. These are all to be covered in this area. So when we talk about the entire area of representative personal account, it is related to the area of the amount which we have to give to someone, the amount which we have to receive from a person, the amounts which are related to this particular area of giving and receiving from someone. We are going to consider this amount as representative personal account. So this is basically many parties of the same nature are represented in a single account. So there are multiple parties. For example, if I have to give money to someone, then that particular person would be related to the area of outstanding expenses. So outstanding expenses is denoted as the account there, which means all the expenses which I have due to someone, I have to pay to someone, that would be considered in this area. Then what do the intangible real accounts represent? When we talk about the intangible real account, items that can be seen or touched, items that are tangible but cannot be measured, items that cannot be touched in but can be measured in terms of money, artificial entities involved in the business transactions. Intangible real accounts relate to the area of all the assets which cannot be touched, and they are covered under real account only. So intangible assets means all the assets through which you earn money. For example, your goodwill, for example, your patent, for example, your copyright, for example, your trademarks. All these are covered under this. You cannot touch goodwill, but it exists, and that becomes the reason that you're making good money. So in this case, what would be the answer? The items which cannot be touched and can be measured in terms of money. वैसे ना in terms of the book itself ना, there is a particular portion where they talked about intangible assets, and then they said it is non-monetary, intangible, which cannot be touched. Non or intangible. Intangible is the word. So this part has to be taken up. Items that cannot be touched but can be measured in terms of money. Okay? Then what type of account is rent outstanding? We just talked about it. Then tangible real account, natural personal, representative personal, or intangible real account. Then we talk about rent outstanding. The amount the company is yet to pay. If it is yet to pay, then it is going to be representative personal account. Okay? The answer is representative personal account. Done? That is representative personal account. Next question. In the classification of accounts, what category does cash belong to? Real, tangible account, then natural personal, or artificial personal account? Cash. Cash is actually an asset through which we earn more, isn't it? So in this case, in the classification of account, what category does cash belong to? Cash belong to the area of real account, everyone. This is a tangible asset, right? An asset which can be touched by us. Then comes, what does the term debit means in accounting? In accounting, it has been taken into the area of accounting from a particular person called Luca Bartolomeo de Piccioli. This particular person had given the area. He said that there are two words which would be whatever money I put into the business, that's the only money that can be used for the business. If I put 100, then I can use 100. If I put 50, I can use 50. If I put 20, I can use 20. There is no other point. So in this case, the area is debit is equal to credit. This is the particular area which he has talked about. In area of debit, it is actually the left hand side, and this is the right hand side. So this is just the concept of LHS equal to the concept of RHS. Okay? Receiving money, giving money, recording on the left side or recording on the right side. It is basically the area of recording on the left side. Whatever money we are bringing in the business, debit what comes in, whatever goes out of the business, credit what goes out. This is the account for real. In terms of real account, the rule of debit and credit is debit what comes in and credit what goes out. This is to be considered there. Okay? Then what can be the rules of debit and credit be summarized in terms of nominal accounts? Debit the receiver, credit the giver. Debit what comes in, credit what goes out. Debit all the expenses and losses, credit all the incomes and gains, and credit the receiver, debit the giver. When we talk about nominal, nominal says it is related to the expenses and incomes. So it is related to the area of debit all the expenses and losses and credit all the incomes and gains. Matlab, if I talk about the crux, debit side is for expenses and losses, and credit side is for incomes and gains. ठीक है? Done everyone? चलिए. Then what is the answer in this case? The answer is debit all the expenses and losses and credit all the incomes and gains.
Hello everyone, welcome to Officer 24/7. My name is Niharika Walia Bhatnagar and I'm with you with the area of AFM. So let's talk about it today. We are starting with another unit. The name of the unit is Bank Reconciliation Statement. Acha, what do you mean by bank reconciliation statement? Reconciliation statement is basically a fight. A reconciliation statement can be said to be a fight between two things. One is your passbook, and second is your cash book. Cash book states that when we talk about the cash book and when we talk about the passbook, cash book can be stated as a point where we are preparing our books of accounts. Cash book doesn't mean cash. It means both cash and bank column, and here it signifies the bank column in the hands or in the books of the businessman, while the passbook is basically our bank account. What bank knows and what we know. That's the difference. When we talk about what bank knows about our credit card statements, our debit card statements, our bank charges. That is something that we don't know about. What I know is I deposited a check, but that check is yet to be cleared. That is what I come to know later. The moment I deposit a check, I'm like, hoga, I am done with it. That means my amount would be reflected in my account for sure. But later on, I'll come to know ki, array, that particular thing is not shown in the books of accounts, right? So technically, in terms of the bank reconciliation statement, you come to know about your transactions related to the bank. Okay? So when we talk about the area of bank reconciliation statement, you have to reconcile where bank thought that it is different and where we thought it is different. Okay? So that's the particular thing that you will find. And everyone, so when we talk about the entire area of bank reconciliation statement, you will either start from cash book or you will start from the passbook. And by starting, what do you mean? In this case, you will see that what is happening in your books of accounts. Matlab, are you receiving money or are you paying money? And in terms of check, in terms of bank charges, in terms of interest, all these things, and is all the transactions which you state that you have done in your bank account is similarly available in your passbook or not. Okay, so this is the particular area of bank reconciliation statement. So let's continue and talk about it. Okay, here comes the first question, everyone. The first question states that the bank reconciliation statement is a part of the double entry bookkeeping, is not a part of the double entry bookkeeping, or part of the bank statement, or none of the above. Everybody? When we talk about the bank reconciliation statement, bank reconciliation is as per the bank statement. No, reconciliation means there's a fight going on. The fight is between our two things, that is my bank and my cash book. That means my passbook and the cash book is fighting. So when these two are fighting, we'll be finding it here. So bank reconciliation statement is a part of double entry system. It is not a part of bank statement or none. It is not a part of double entry system of bookkeeping. It is just a pure working paper that is prepared in order to check whether the books of accounts that are prepared are showing the portion of the effect of one particular entry going wrong or being missed in the passbook and included in our account, or any entry which is there in the passbook and missing in our books. So that's the point. So when we talk about the bank reconciliation statement, it is not a part of double entry system. Chali. Now comes next question. Acha, I'll come back to the numerical a little later. Once I'm giving you a little more basics now, I'll come back to the numerical point. Now, bank reconciliation statement is prepared so that the difference between the under mentioned balances can be reconciled. Difference between balance in the bank and the cash balance, difference in the balances as per passbook in the beginning, at the end, difference between passbook and cash book balances, or none of the above. As I told you, reconciliation means these two are fighting, and when they are fighting, we would like to find a solution to this particular fight, and we would like to basically find out the difference and eradicate the same. So when we talk about the bank reconciliation statement, it is a difference, removal of difference between the cash book and the passbook. So we are looking at passbook versus cash book. Next question. A bank reconciliation statement is prepared to know the causes for the differences between the balance as per cash column of the cash book and passbook, the balance as per bank column of the cash book and the passbook, then the balance as per the bank column of cash book and the balance as per the cash column of the cash book. Now it is almost everything looks same. When we look at our passbook, the BRS is prepared. When we look at the passbook, it is the debit and the credit side of the passbook. The debit means withdrawal and credit means putting money, deposits, right? And in the cash book, it is the bank account. Okay? Or you can say the bank column if it is a double column cash book. Done? The balance as per the cash column of the cash book and the passbook. Next question. If the bank statement shows a higher balance than the cash book, what adjustment is needed in the bank reconciliation statement? If the bank statement shows a higher balance, matlab, what is happening is the passbook is showing that it has got 12,000 rupees in it, while the cash book is saying that the value is bank statement shows. Okay. So in this case, the cash book is showing 10,000. Maybe I would have made some payment to someone, you know? Maybe I would have made some payment to someone and I thought that particular person has withdrawn the money. But in actual, that person hasn't withdrawn the money. So if he hasn't withdrawn the money, so what will we do? If the bank statement shows a higher balance than the cash book, in this case, the correct answer would be add the excess. This means in this 10,000, add the 2,000 rupees, and then both the sides would be showing the same amount. This should not happen that our books of accounts are having any variations. So technically, you have to add the excess to the cash book. If the bank service charge is debited by the bank in the statement, how would it be treated in the bank reconciliation statement? added to the cash book balance, deducted from the cash book balance, added to the statement, or deducted from the bank statement balance. Now, when we talk about the bank service charge is debited by the bank in the statement. Acha, when we talk about service charges, now we are talking about service charges, which are deducted by the bank. Obviously, bank knows about it. For example, the charges deducted were 500. So passbook knows about it, but the cash book says I have no clue about it. So in this case, what will happen? Add to the cash book, deduct from the cash book, add to the bank statement, and deduct from the bank statement. Acha, in this question, it is required to let you know that this question requires a little paraphrasing, and bank reconciliation statement prepared from cash balance. Now, when we are looking at the cash balance, and on the basis of cash balance, we are finding our bank balance. So, in this case, the correct answer would be what? In this case, we would always correct our cash book. If passbook says I've deducted 500, why would we fight? The moment I come to know that this 500 was deducted by the bank, so I will reduce this 500 in my books as well. So technically, this would be deducted from the cash balance. So in both the cash book balance, so in both the cases, our bank reconciliation statement will match up. And everyone, so this is our bank reconciliation statement. Done? Okay. Next question. In this case, error in recording of the deposit in the cash book leading to the cash book balance lower, and how does this error be shown in the bank reconciliation statement? Such kind of questions can be expected in the examination, as they have started asking questions which are on this basis only. Matlab, these questions are now shown in such a way that they are giving you practical questions from the point of view of theory. If there is an error in recording the deposit in the cash book leading to the cash book balance being lower, how would this error be adjusted in the BRS? Added to the bank statement and deducted from the bank statement, added to cash, or deducted from the bank. If there is an error in recording the deposit, matlab in the cash book I made a mistake, and in the passbook I made a deposit of 1000 rupees and I had no clue about it, that I somehow wrote it at 800 plus in my cash book. But when my passbook, I have noted that I have deposited 1000 rupees. If I have deposited 1000 rupees in my bank, so what will happen? The moment I come to know that in my passbook there is a variation, and then they will say, why is there a variation? I'll say the reason is I deposited 1000 but I wrongly noted it as 800. So in this case, when we'll be correcting it, it would be plus 200. So it would become plus 1000 on both the sides. This is how the bank cash book as well as the passbook will match. So basically, when we talk about the bank column of the cash book, it will again show 1000, and the passbook, and we know the difference was because of the wrong amount that was written in terms of deposit. So the correct answer comes out to be added to the cash balance. Done. Now let's move on to the next question. Okay, now comes, Achha, these are all advanced level questions. I'll come back to these questions. What does it mean if the bank reconciliation statement shows a favorable balance? The cash book balance is higher than bank balance statement. the bank statement balance is higher than the cash book balance, or the two balances are equal, or there is an error in the reconciliation. When we talk about favorable, favorable means it's a situation where we are having a benefit. In terms of bank reconciliation statement, favorable balance would mean that we have money, है ना, we have more money. So in this case, can I say the cash book balance? In this case, favorable means you have a money in your bank account. Overall, if I have to tell you, it means you have money in your bank account. So that is how we define a favorable balance. And the favorable balance can be stated that in terms of your cash book, now you have more than what you think in your bank is. So cash book is more than your passbook. And this is where we specify we have favorable balance. And in this case, the cash book is higher. So the answer is A, everyone. The correct answer is A. The cash book is balance is higher than that of the bank statement balance. If there is an error in recording the deposit in the cash book leading to the cash book balance being lower, how would this error be adjusted in the BRS? Added to the bank statement balance, deducted from the bank statement balance, added to the cash book balance, or deducted from the cash book balance? Where would you put it, everyone? If there is an error in recording the deposit in the cash book leading to the cash balance being lower. In this case, the cash book balance is if 800, while your passbook balance is plus 1000. So what will you do? Now that you know that in your cash book the valuation is undercast, when it is less than the required value, it is called undercast. So in this case, what would be the answer? In this case, the correct answer would be added to the cash book balance. The answer is C. Chali. Now comes the next question. Which of the following is not the adjustment typically made in the BRS? Outstanding checks, bank service charges, sales revenue, or deposits in transit? Which of the following is not typically made in the bank reconciliation? See, bank reconciliation statement talks about many things. It talks about the errors in the cash book, errors in the passbook, adjustments to be made. If there is any in this area, what we can say is there is a change there. Obviously, in one particular part of the particular passbook, you have made it right, and then in your cash book, it might be wrong. In terms of your cash book, it might be right, and passbook would be wrong. Vice versa, both the things can be there. So, in this case, the outstanding checks, the bank service charges, deposit in transit, this is all bank transactions only, but there's one particular transaction which totally belongs to the business, and that is sales revenue. So in this case, the correct answer is C, sales revenue. Okay, the answer is visible. So I'm just leaving it there. What does it mean if the balance reconciliation statement shows a favorable? Acha, we are done with this. We're done with this question. So technically, we are already done. How can the rules of debit and credit rules be summarized for normal accounts, everyone? We have talked about the normal accounts in the previous class. So this is just a question with reference to our previous class there. How can the rule of debit and credit be summarized? The rule of debit and credit in terms of nominal accounts. It is basically debit all the expenses and losses and credit all the incomes and gains. Right? So in this case, what would be the answer? In this case, for nominal account, we have debit all the expenses and losses and credit all the incomes and gains. Answer is C, everyone. Okay, so quickly let's finish off the numerical portion and the theoretical portion, and then I'll deal with the numerical portion as well. What would be the answer, everyone? If the business receives interest according to the rule of nominal account, how would you treat the following? If the business receives interest according to the rule of nominal account, if the business is receiving interest, everyone, debit all the expenses and losses and credit all the incomes and gains. If the business is receiving interest, it would be interest account, and interest is basically your income. So if it is your income, it has to be on the credit side. In this case, it would be interest account is basically your form of revenue. And everyone, any doubts till now? Chaliye. Now let's look at a few questions that I have skipped in the beginning with a genuine reason that I wanted to discuss the numericals at the end. So I'm going to discuss one of the numericals now. The cash book of XYZ shows that the balance is basically 8500. That means in my books of accounts, not the bank's, but my book of accounts. What would be the answer in this case, everyone? In this case, when we are preparing our books of accounts, it's going to be 8500. That is my balance. And then they said the bank statement shows the balance is of 9200. This is my passbook. So what's the difference? The difference is of 700, and there is an account outstanding account balance of outstanding deposit of rupees 500. Now this deposit of 500 will also be maturing, you know. Then in this case, what would be the answer? In this case, the correct answer is going to be this 500 would be added and that 1000 would be gone. In your current balance of 8500, you can see that the balance is of total 8000 rupees. Done. So in this case, what do? You take your passbook and then you take your cash book. You find the differences are coming from where. Then you eradicate or eliminate the reasons. Good evening, everyone. Welcome to Officer.24/7. My name is Niharika Walia Bhatnagar and I'm with you with the area of AFM. I hope I'm audible clearly, everyone, and the PPT is clearly available, visible to you as well. Chaliye, let's continue further. So let's continue further. Today I'm going to talk about the topic of trial balance, rectification of errors, and adjusting the same. So when we talk about the entire area of trial balance, what is exactly a trial balance? Let's begin with this portion. When we talk about the area of trial balance, what is it called? When we talk about trial balance is actually a statement. Trial balance is a statement. A statement which is basically a working paper. How do we define a working paper, everyone? In this working paper, you will find a few things. Number one, in this working paper, you have both the sides, debit and credit. Number one. Number two, this is prepared after you have prepared your journal, then you have prepared your ledger, and then comes this point. In this case, it is always equal. That means the debit side is always equal to credit side. It doesn't have a specific nature. That means it is neither real nor personal nominal. It has nothing of that sort. This is clearly a statement where we record everything. All the important aspects of the business are recorded here. Okay, so as you already know, when we talk about the various areas of the accounting, we have certain important things. What are those things? Number one, when we talk about the area of assets, assets can be said as something which is always starting from the debit side. Okay, so assets are something which are on the debit side, while liabilities are something which will always be on the credit side. The rule itself states that when we have assets in the business, the assets are always on the debit side. This is the basic nature of accounting. In accounting, one of the basic things are there when we talk about cradle, capital, revenue, asset, drawings, then liabilities and expense. LRC will always be on the credit side. Your capital, your revenue, and the liabilities, while your assets, your drawings, and your expenses are always on the debit side. The same rule would be reflected when you see the trial balance as well. And what are the basics there? The basics are assets will always be on the debit side, liabilities will be always on the credit side. The equity will always be on the credit side. The drawings are on the debit side. See, D for drawings, D for debit. Revenues will always be on the credit side and expenses on the debit side. So you can see A, D, and E. Aid are always on the debit side. Their balances are always debit. For example, if I talk about cash, I can never say that I have minus 20 rupees in my pocket. You just can't have it. You cannot have minus 20 rupees, minus 40 rupees in your pocket there. Right? So that's the particular point regarding this era. Now, what is it that we have to consider? When we talk about the credit side, on the credit side, we have our capital. Capital being positive is always on the credit side. If you have withdrawn too much money and it becomes negative, it would be shown on the debit side. Liabilities are always on the credit side because it's a burden. You have to pay it off. And the reason behind this scenario to earn is the area of revenue. So entire area of the trial balance goes like this. And when we talk about the area of accounting cycle, what do you mean by accounting cycle? Accounting cycle is the way through which we prepare the books of accounts. We prepare the books of accounts by first of all recording you maintain your source documents. Matlab, there is an invoice that you saw. There is a bill that you saw. Okay, I purchased something. I sold something. And then on the basis of that, you prepared your journal. Individual transactions noted down on the basis of the sequence. Then comes the next area that it is ledger. How do you define ledger? Ledger is basically the tabular form. Obviously, there were n number of transactions they required compiling, they made into ledger. Then we compile them further because we cannot understand things. They said, how can you understand? They said, just prepare a statement for the same. Now. So you compile things together, you form the proper statement, which is called a trial balance. And from the trial balance, you compile your profit and loss account and your balance sheet. So this becomes the base. The trial balance is the base for your preparation of financial statements, which are to be shown to the users of accounting. Okay? So that's the next point. Now comes the question. Acha, everyone, if a company, because we have talked about trial balance, and now I'm going to talk about a few errors that happen. If a company fails to record the purchase of inventory on credit, how will it impact the trial balance? Assets will be overstated, liabilities will be understated, equity will be overstated, or trial balance will not have any effect. What happened is a company fails to record the purchase of inventory on credit. Acha, what happened is I purchased inventory. Matlab I have got goods, है ना? Yes, I have got goods. And if I have bought goods, then what happened is I have bought goods, and on the purchase of those goods, the next thing that happened is on the purchase of goods, I had paid, I haven't paid for it. So the creditor or the supplier is still there, and the goods are known as stock. The entire journal entry is missing. That means the debit side is also missing and the credit side is also missing. If both are missing, what will happen? Can you trace it down? Always remember, when such things are not traceable at all, if you cannot even find out what happened in the entire scenario, then what will happen? वैसे तो ना, if the entire thing is not recorded, then the trial balance will not be affected. That would be the correct answer. If the company fails to record the purchase of inventory on credit, now if the inventory, if it is one-sided, this question has to be elaborated further. If it is one-sided, if you have noted just the one particular thing, that is inventory, and you haven't noted down the creditor, then it would be different. If the entire journal entry is missing, then the debit and the credit side both are still same. So D would be the answer. That is, the trial balance will not be affected in this case. Okay? This is called the error of omission. Error of omission means anything which you tend to forget to record. When you tend to record something, it is called errors of omission. Okay. Acha everyone, the PDF of the same is available with you. You can download the app, and this is where you will find the particular PDF of this particular class. So what you can do is you can check it out after the class for the same. The trial balance will not be affected. This is called error of omission. Acha, next question everyone. When we're talking about, obviously there are errors as well, because to error is human. So if it say to err is human, everybody can make errors. So how do we consider, how do we come out of those errors? What is the purpose, what is the purpose of a reversing entry, and how does it impact the trial balance? Acha, what happened is I found that there was something missing or something was wrong. So what I did was I reversed the journal entry. Matlab, to correct the errors, it has no impact. To reverse adjustment entries, it affects the trial balance temporarily. And to close the temporary accounts, it permanently affects the trial balance, or to reconcile statements. Acha, when we reverse the particular journal entries, what will happen? Basically, na, in this case, when we do this part, that is, you adjust all those things. This can be done to uh, no, the answer should be to correct the errors. Reversing entries are put for that particular thing. If there was an error, so we have to just rectify that error. So for the rectification of error, what will you do? You will correct it. You know? So in this case, the correct answer would be to correct errors. It has no impact on trial balance. For example, I found out there was an error on the debit side. So what I'll do is I'll reverse it, and then it would be gone. So my debit will be equal to credit. So everything in the books of accounts would be reinstated. Okay, now comes the next question. Now the question says, if a company mistakenly records an expense as an asset, now what has happened? An asset and an expense. Okay, how will it affect the trial balance? Such an error, when we talk about if a company mistakenly records an expense as an asset. See, both of them, assets are on the debit side and expenses are also on the debit side. If we talk about the trial balance, in this case, what will happen? The face of it, obviously, if 10,000 was to be shown here, 10,000 is shown here. The difference in terms of the total will be fine, but the presentation of your trial balance is wrong. Something which was an expense is taken as an asset, or something which was an asset is taken as an expense. So what will happen? Your answer would go wrong. And when your answer would go wrong, how will you correct it? You will have to find a way to correct this situation. Then this means that the trial balance will be out of balance. In this case, there is a presentation issue. Okay? So the problem is of presentation. Okay. So comes the next question. If the company fails to record the depreciation, everyone, the company has failed to record the depreciation in the adjusting entries. So, pata, there are two kinds of trial balance. One is without adjustment or unadjusted, in which we record just the basics that we got. And then what we do is, acha, there was depreciation, there was some outstanding expenses. Depreciation, some outstanding expenses, and just a moment. First thing is depreciation. Then comes the outstanding expenses. Then comes the area of accrued incomes, the incomes which are yet to be received, and any other errors that we have just found. When these errors are not yet adjusted, that is called adjusted trial balance. And when it has been adjusted, that means all these errors are corrected, then it becomes adjusted trial balance. Okay, so what they do, they prepare this particular statement. So if the company fails to record depreciation, what is happening? In your asset side, what will happen? My asset is still shown at 10 lakh while the depreciation was of 2 lakh. So the trial balance will be unaffected, or assets will be overstated, equity is understated, liabilities are understated, equity is overstated. Equity here means capital, everyone. The other name of equity is capital. The trial balance will show an equal or opposite effect. Always remember, what has happened is there was a depreciation. Depreciation is an expense. Expense will lower down our profit. So technically what will happen is our assets would be shown at a price which is higher than that. So technically my assets are overstated and the equity is understated. The value of my capital is understated because what I've done is uh, from the profit, what has happened? We had to consider the area of depreciation there in the area of profit. So one thing is there, the assets are not at their correct value. Okay. What is the primary purpose of preparing the trial balance before the financial statements? To ensure all the transactions are recorded accurately, to calculate the net income for the period, to facilitate the preparation of tax returns, or to determine the cash flow position of the company. As you already know, when we go back, I'm going back, we talked about this area. Trial balance is the base. What did I say? That it is the base, or it is the reason that we are able to compile everything from the ledger, and that compilation leads to the area of the financial statements. Then everyone, then comes that is to ensure that all the transactions are recorded accurately. One particular reason for it is to have accuracy. Acha everyone, if an adjusting entry for accrued revenue is omitted, then how will it affect the trial balance? If an adjusting entry is overstated, acha, is omitted altogether, there is an asset which is not recorded. Okay, an asset and the person from whom the amount is due. So how does it affect the trial balance? What would be the answer there? Okay, if I have to correct it now, the trial balance will still match. Total would be wrong. So this should be the exact answer, everyone. Okay, just paraphrasing the question a little bit better. When we talk about you didn't note something on the debit side, you didn't note something on the credit side. Obviously, the thing is missing from both the sides. So technically, there won't be a problem. So what is the issue that we'll be solving out? The trial balance will match what wrong total would be there. Okay, the answer is D. Acha, what is the significance of a zero balance in the trial balance, everyone? If we have zero balance in the trial balance, then this indicates all accounts are closed. It suggests that no error were made in the accounting period. It means the trial balance is incorrect, or it signifies the debit is equal to credit. When we'll see that some ledger has zero balance. For example, Mr. X has zero balance on the overall. So this means on the debit side, if it was 20,000, on the credit side, it was also 20,000. There was no need for a balancing figure. Thus, in this case, what has happened is the debit was equal to the credit altogether. So there was no discrepancy कि अच्छा it is varying at all. So, comes the next question, everyone. In this case, if a company records an expense twice, so there was an expense which was written here one time and then two times, and but does not realize the error, how will it affect the financial statements? Net income will be overstated, net income will be understated, total assets will be understated, both A and C. What would be the answer, everyone? Okay, if a company records an expense twice, but does not realize the error. Obviously, in this case, one problem that will occur is your if it is an expense which is recorded twice, then your net income is understated. Why? The expense has been noted twice. Obviously, it is going to hurt my pocket. So if something's gonna hurt my pocket, then net income will be understated in this case. What is happening is if record expenses recorded twice, your expense is more, your income is less, then ultimately it would look like you are facing a loss while you are not facing a loss. Okay. Next point. When preparing a trial balance, what is the impact of an error in the beginning balance of the account carried forward from the previous period? Matlab, there is a sin that happened in the last year. If there's a error that has happened in the last year, what should I do about it, everyone? How do I come out of the scenario? Chali. Now let's talk about this. If we talk about the trial balance, what is the impact of an error? If we talk about an error which has happened in the previous year, then in this case your trial balance is definitely not correct. It is something which is out of balance. See why? Because there was a sin which is being carried for a longer period. So how do we deal with it? The trial balance will not be affected. The trial balance will be out of balance. The error will be automatically corrected itself, or it depends on the type of error. In this case, the correct answer is the trial balance will be out of balance. Okay, I think Acha, we were done with this. This is a repetition. What is the purpose of post-closing trial balance, everyone? What do you mean by the post-closing trial balance? When we talk about the post closing trial balance, it means a trial balance which is created after post closing simply means that once you have finalized your books of accounts, then you check it to verify the accuracy of closing, to check if temporary accounts are closed, to prepare the financial statements, or both. See, post closing is when you have done with it. So technically, you're just verifying your previous entries. And if all the temporary accounts, whatever you had opened, it has been closed down now, because ultimately debit should be equal to credit. So in this case, the correct answer should be both A and B. Okay. Now moving on to the next question. It says when preparing a trial balance, which of the following errors is more challenging to detect? Commission, omission, original entry, or reversal? So say difficult. One of the most difficult entries are what? Entry of error of original entry. If the first entry that you were recording, it went wrong. If the initial entry went wrong, then whatever you try, once it's wrong, then everything is down the drain. Your entire working will definitely be affected badly, right? So, in this case, what would be the answer? In this case, there is one point which makes things clear, and it is that in an organization, what's happening is that the error which is there in the very first deposition, that means when you are recording it in the books of accounts, then everything goes down the drain. So in this case, the correct answer is error of original entry. If the beginning part is wrong, then entire thing is wrong. So that's the point. So, okay. Hello everyone, welcome to Officer.24/7. My name is Niharika Walia Bhatnagar and I am with you with the area of AFM. And today we are talking about another important topic for the examination. The important topic that we're going to talk about today is depreciation and its accounting. Acha, what do you mean by depreciation, everyone? Do you know depreciation is basically, acha, I bought a phone. I bought my phone last to last year. It's been 2 years that I'm using the phone. If I ask you to buy the same phone from me and I bought it for maybe around 10,000, then will you buy it for the same amount? I don't think so. If I bought it for 10,000 after 2 years, you'll be like, ma'am, I'll give you hardly four for this. And that too is even more because after 2 years, things have changed a lot. So I'm not going to buy the same phone at the same price. That means the reason behind this is depreciation, usage, wear and tear. Then, even if the seal is broken, then even that particular phone is considered as a second hand phone. And psychologically, we are like, this is not first hand, this is not new. So anything which is not new, whenever we buy those things, obviously the value of those things would be less based upon the technological changes due to the usage, due to the wear and tear, it gets scratches and everything. So that particular value reduction is called depreciation, everyone. So we have depreciation and its accounting. Acha. Now, this is how we define the area of depreciation. But how do you define depreciation? Depreciation is the reduction in the value of the asset. For example, this particular truck, if you're using it, then due to its usage, obviously, when we bought this at that point of time, maybe it would have costed us 5 lakh or 8 lakh. Now the value has reduced. The reason is it has been used for a long period of time. It has traveled. It has been having the service cost, repair cost. All those costs are already included. So that's why when we talk about this particular asset, always remember depreciation is always on assets. So depreciation will be a part of your operating cost. Basically, if I'm losing the value, I'm not paying it to someone technically. I don't pay any money to anyone. You know, if the amount is rupees 10,000, I am not paying the reduced value of 6,000 to anyone. That is my loss. That is why it is considered as a cost because we are using it in our business. Anything which is used in the business will have a specific cost. Then the next point is it is reduction in the value of the asset. In this case, the value of the particular thing goes down, right? Then the second point is the decrease in the value of the asset is due to its use caused by wear and tear or by other reasons. It can be wear and tear because we are using it due to its usage, due to technological obsolescence. Or technological obsolescence means matlab there was a time we all had Nokia phones. My Nokia phone had a Symbian technology. Now what we are using are Android phones and Apple, right? So all these things, iOS is there. So when we talk about all these things, these are new technologies which came up. And then even in the iOS or in the Android phones, every single year there is a new major update, a new major software coming up. So technically the previous softwares are slower, the newer are better. So that is the point where you find that this particular decrease in the value of the asset is because of all these reasons. And decrease in the value of an asset is gradual and continuous till the time the thing is used in the business. Obviously, the loss is of the business. The value that particular vehicle is used in the business. So, if the vehicle is used in the business, so the price of it has to be charged in the business itself. So, that's all about depreciation, everyone. Now, let's move on and talk about the next point. That is, how do we define depreciation in a simpler manner? It is basically decline in the value of the asset because we are using it over a period of time. So typical car depreciation over 20 years normally, currently I think the cars are, people are using it for max 15 years, right? After 10 to 12 years, people tend to change it because of the repair cost and service cost, which is way too high. So when we talk about the depreciation, depreciation is value reduction because and we will spread out the particular loss. We are not going to take the loss in the first year itself, but we will spread out the loss over the time span of that particular asset. So if we if I buy a particular property, land doesn't have depreciation, right? Why? Because if I buy land, land has been there for years. There has been centuries. The earth is so old. So we cannot say the earth is getting older and older. Technically, with that particular thing happening, land is getting scarce, and due to which the price of the land as a particular resource has declined a lot. So technically land is the only thing that doesn't depreciate. Everything else does. For example, the equipments that we are using, the particular phones that we are using, all those things that we have are considered in the area of depreciation. Okay? So depreciation, what is depreciation? Depreciation is decline in the value of the assets over a period of time. Okay. Now comes the first question, everyone. The first question relates to the area of what is the primary objective of depreciation? To increase the market value of assets, to spread out the cost of long-lived assets over the useful economic life, or to eliminate the wear and tear on assets, or that is the last one, to generate the additional profit for the business. What would be the answer in this case, everyone? When we talk about the area of the primary objective of depreciation, the primary objective of depreciation is definitely to record that we are using something in the business, and obviously every single day if we're using it, its value is declining now, so value decline has to be recorded properly. So technically in this case, to spread out the cost of long lived asset over the useful life. So in this case, depreciation aims to allocate the cost of long-lived asset over its useful life. Okay? Now comes, okay, when we talk about an asset, for example, I bought a car for 10 lakh rupees. It was worth rupees 10 lakhs. So technically every year it is used by my it would be used by the business. It is estimated that after 10 years this car is going to be scrap. Okay, so then that means normally the life of the car is definitely more, but let's assume that. So technically, the loss every year should be booked as rupees 1 lakh. That is a non-cash expense. I don't give ki acha, the value of my car has declined by 1 lakh. This is my 1 lakh for you. I don't pay the money to anyone, right? This 10 lakh would be just recorded in the books of accounts. Okay? So then, according to the Institute of the Chartered Accountants of England and Wales, how is depreciation defined? A reduction in the asset value due to market fluctuations, a loss incurred when selling a fixed asset, a provision against the loss of capital that is integral part of the conducting business, an increase in the value of the assets over the period of time. When we talk about the depreciation, it is basically something that I can consider that since we are doing the business, obviously we would face certain losses, isn't it? So this particular definition of depreciation would be related to the area of, it is a provision कि ठीक है, every year we will reduce by 1 lakh and every year we'll try to save rupees 1 lakh. So after 10 years, at least whatever money we have got, we can buy another machinery. ठीक है? That particular thought process. The definition emphasizes this definition emphasizes as the provision against the loss of capital during the effective commercial life of the asset. Which of the following is not a cause of depreciation? Wear and tear due to actual use, a flux of time, obsolescence, or the area of increase in the market price. Which of the following is not a cause of depreciation? Acha, when we talk about depreciation, causes are many. Wear and tear is something that we did in the very beginning. That was taken from the book itself. So wear and tear is a part of it. Then efflux of time, time passes and obviously the value of the thing goes down. At one point of time, the value of one particular thing was so huge. People just loved it at one point of time. So demand was more, people used it more, it got rugged, it got used. Then is obsolescence. Obsolescence means, that means over the period of time technology gets older and then people think it's time to scrap it up. And then comes the increase in the market value. So in this case the correct answer is D, increase in the market value. Okay? The market value has nothing to do with depreciation. Market value can change over the period of time, but if I'm using something, its value is bound to go down. That's one of the realities about the particular things. So in this case, the correct answer is D. Acha, now comes the point, what is an example of efflux of time as a cause of depreciation? Wear and tear due to usage, a car brought in 1972, losing its value in 2022, accidents damaging an asset, or new inventions making an asset obsolete. When we talk about this era, what is an example of efflux of time? That means the time is passing. So when we talk about the time is passing, that simply means in this case, it is a car brought in 1972 losing its value in 2022. Though if it's a vintage car, obviously the value is going to increase. But again, that is a part of market value. That is not a part of your regular usage. So when we're talking about the regular usage and all, then obviously the value has declined. But if you look at a vintage car, it is a win-win situation, right? Okay, now comes the next point, everyone. The example given illustrates how the mere passage of time can reduce the value of an asset. Acha. Next point, in which cases do assets generally appreciate? Not every asset appreciates, right? So land and old paintings, machinery and equipment, building and furniture, and all types of assets equally. In which cases do assets generally appreciate? Assets will always appreciate. See, land and building, land is something which doesn't depreciate, right? So appreciate means the value increases. Depreciate means the value decreases. We just saw it now. Depreciation is the value reduction, and appreciation is the increase. So in this case, land and old paintings are to be covered in this area. So in this case, the land and old paintings are mentioned as examples of the that the assets may appreciate. If there was a particular, there was a very renowned painter, I think many of you would be knowing about him, M.F. Hussain. Mr. M.F. Hussain was such an extraordinary and exceptional painter. He's painted a lot of paintings. Now he has passed away. So if there's any painting that we'll find, for example, even regarding the oldest paintings, let's talk about the painting of Mona Lisa, or when we talk about many other paintings which have been painted by Leonardo, then Da Vinci there, right? So if we talk about Da Vinci was the person there. I think not only that, there were many other rare people who have done that. I'm not sure about the Leonardo there. I think that the name is different for sure. I was just thinking about that particular name right now. Once I'll remember it, I'll definitely share the name. So many of these exceptional painters are there now. So all these painters have definitely worked very well. So their paintings are now increasing. Their paintings are having a greater value right now. That is something that you will find here. Now comes the next point. What is the primary purpose of showing the correct financial position in the financial statement? I bought my laptop in the year 2020. Okay. My laptop was worth rupees 80,000 at that point of time. It is 2023 going on. Normally, it is expected a laptop's life is barely 4 years. After 4 years, it's just gone. So whatever the price is, if I paid 80, after a year, I think after 2 years, 3 years, the value has declined significantly. So what will I do? I am supposed to show it in the books of accounts. Otherwise, I am betraying the shareholders, because the shareholders would be asking me, sir, you didn't show the true picture of the books of accounts. That is a sin. So, to attract investors to comply with legal requirements, or to facilitate tax planning, or to reflect true and fair financial position of the concern. When we talk about the primary purpose is to show the true and fair view. That means whatever the value of your assets and liabilities are, you should be upfront and clear about it. Okay? That's the purpose of this thing. So now comes another important point. The point says, what does the residual or scrap value refer in calculating depreciation? The initial cost of the asset, or the estimated value of the asset at the end of its useful life, or the salvage value of the asset, or the market value of the asset. when we talk about the residual or scrap value, that means the value that would be there by the end of the life of that asset. So when we talk about the life of that asset by the end, that means we are talking about it has been used for years. So after the completion of that life, when we talk about it, it is the end amount. So this is estimated value at the end of the life. It is also called, it is actually also called salvage value. So all these things are the same: residual, scrap, and salvage value. Okay, this is the value which is there at the end of the year. So I believe B part also satisfies that particular point. This is the estimated value of the asset at the end of its useful life. Now comes the next point: why is it necessary to make a provision for the replacement of an asset? To justify the write-off of in the financial statements, to minimize tax liability, or to ensure the continuity of operations, or to increase the book value? What's the answer there? When we talk about the provision now, the provision for replacement is basically done in order to after a certain period of time now, they see provisions are basically the certain losses or certain profits that you are already making. There's a certainty behind it. So when we talk about this area, that is when we are talking about the replacement of an asset, we strongly believe that our business are going to continue. That means if I bought a particular car for 10 lakh rupees in one particular year, after 8 to 10 years, I bought another car. I have faith that this particular business will outlive the entire situation. So in this case, why is it necessary to make provision for replacement of an asset? It is to ensure the continuity of operations. Okay? It is to ensure the continuity of the operations, because obviously every year if I keep a particular amount separate, so after 5 or 10 years this entire amount would be received by us together, and that would be used further. So making the provisions for the replacement of an asset ensures that the continuity of operations by planning for the replacement when the current assets becomes obsolete. Now, what are the basic factors considered for calculating depreciation? Market value, production capacity, and asset category. The cost of an asset, estimated residual value, and estimated useful life. Historical cost, market value, and economic conditions. Salvage value, depreciation rate, as well as the area of tax implications. What would be the answer in this case? What are the basic factors? Why do we do this? The deposition is definitely, once we understand, but then overall there are more than 10 methods that exist in the depreciation, but in our syllabus barely, I think two are definitely there, and three, I think four or five max. Five are maximum that we find in our book there. Rest every other category is not shown there. So basically they've just shown a part of the entire deposition to you. Now, when we are considering this point, that what are the basic factors considered for calculating depreciation, it is basically to know what is the value of the asset. Higher the value of the asset, higher would be the amount, then estimated residual life and estimated useful life. In this case, the correct answer would be B. The cost of the asset, estimated residual life, as well as the estimated useful life. Okay, here comes a numerical question, everyone. Let's talk about this numerical question as well. This is based upon SLM method, original cost or straight line method. Under this method, one specific amount of depreciation is charged every year. We bought Patel Transport acquired a truck on 2019 October. Matlab 6 months have already passed. They bought it for 4 lakh rupees. And they said the depreciation would be 10%. So technically it's easier. It would be rupees 40,000 in the first year. Flat question. This should be the correct answer and we are done. No. The particular asset was bought on 1st of October. If you have bought it on 1st of October, that means half year has already passed, because our books of accounts are closed on 31st of March. That means this 40,000 has to be done with 6 by 12. So technically my amount is rupees 20,000 of the depreciation for the first year, everyone. only for the first year, because in the first year we bought it in between. So it is used for 6 months, then it is scrapped off, and then it is being continued further. So in the first case, it is rupees 20,000. Now, they say that Patel Transport acquires the same question, and they are asking what is the book value after the second year. Matlab, in the first year, if I look at the value of 4 lakh, okay, we are trying to find out the book value. What would be the value in the books of accounts? So first year, the depreciation was of 20,000. We have just calculated it. So that means we are left with 3,80,000 rupees. From this 3,80,000, remove for the second year, it is going to be flat 4 lakh into 10%, because depreciation is always on original cost, not on the amount which is left or something else. No, it is always on the original cost in this case. That would be around 40,000, everyone. If it would be 40,000, that means we are left with 3,40,000 by the end of the second year. Done, everyone? Under straight line method or SLM method, what they do is your depreciation is calculated on the basis of your initial cost. The depreciation remains the same. That is, it's constant throughout the particular calculation. So in this case, what would be the correct answer? The correct answer is going to be 3,40,000. Okay, the answer is 3,40,000. And look at this particular question. In the first year, we bought it for 4 lakh, and then obviously it was used for half year. So then we had to take the depreciation only for half an year. So the amount was 3,80,000. Once you're left with 3,80,000 rupees, then what has happened? The depreciation next one time would be 40,000, and it is carried down. Then 3,40,000 and depreciation is 40,000, and 3 lakh carried down further. So that means every single year the depreciation is going to be the same. It is different only in the first year, because of the reason that 20,000 rupees is for the half year. In the first it is used in between, rest after that it is being used completely in the business. Done. So this is where the entire portion of this concept is done. I hope it was helpful for you. If it was, then don't forget to join our batches. Our batch for JIIB have begun, and more batches are coming up, everyone. What you can do is you can go on to our website. Let me show you where to go exactly. Yes. You have to go on to our website, that is www.adda247.com. As soon as you go here, you will find it in the area of JIB and CIB. If you open this up, you will find our JIB, CIB, Mahapack. Under Mahapack, you will find all the classes for JIB. Only JIB and JIB plus CIB and JIB with the bank promotion as well. So you can purchase any of these. Mahapacks are always better because they have more content. That means English medium, bilingual, both available. Ebooks, test series, both available. Then marathons, that is 10 plus hours of mini marathons, 5 plus hours of Maha marathons, both available. Then the previous classes, present classes, and even the upcoming batches, till what time you have your validity, till that particular time, everything is available. So ultimately, the Mahapacks turn out to be more beneficial for everybody there, right? And if I'm looking forward towards, say, I'm trying to buy JIB, CIB, Mahapack 2.0. So what I'll do is I'll click on the area of Y541 and apply it. As you can see, in this case, you will get a discount of 81%. Sorry, in this case, you will get 78%. Okay. So in this case, your discount is going to be of 78% if you use this particular code and you apply it. Okay. So you will get the 77% discount in this area. The validity is for 12 months, and 12,073 would be the final amount. So you can check it out on our website, on our app. Along with this, if I talk about the only JIB area as well, then only JIB Mahapack is also there, and you can also review the JIB May 2024 classes as well. The bank promotion packs are Lakshay and Achievers batch is already out. From 11th of December, we have started another batch. That means this is the perfect time since you have started it. So you can look forward towards any of the batches in terms of English medium or the bilingual batch, whatever you feel is best for you. So go ahead and check it out on our website or in our app for further details, and you can use the code Y541 to get 78% discount. So hurry up and check it out now, everyone. Till then, we'll be meeting tomorrow. Thank you.